Frequently asked questions about buying versus leasing a car for business in Canada. What are the tax implications for leasing versus buying a car for business use in Canada? The tax implications of leasing versus buying a car for business use in Canada are different. When a business leases a car, the lease payments are tax deductible. However, the amount of the deduction is limited to the amount of the lease payments. On the other hand, if a business buys a car, the business can claim capital cost allowance (CCA) on the car. The CCA is a tax deduction that is based on the cost of the car and the year the car was purchased. How do car lease payments affect tax deductions for Canadian businesses? Car lease payments are tax deductible for Canadian businesses. The amount of the deduction is limited to the amount of the lease payments. This means that if a business leases a car for $500 per month, the business can deduct $500 per month as a business expense. What are the financial advantages for a small business to lease a car in Canada? Leasing a car can be advantageous for a small business in Canada because it provides a way to acquire a vehicle without a large initial investment. This can help preserve the business's cash flow. Leasing also provides the business with a predictable monthly expense, which can make budgeting easier. Additionally, when a business leases a car, the business is not responsible for the resale value of the car. What are the limitations on auto lease payments for tax purposes according to the CRA? The Canada Revenue Agency, or CRA, limits the amount of auto lease payments that can be deducted for tax purposes. The limit is based on the fair market value of the car when it was first leased. The CRA sets a maximum amount that can be claimed each year. If the lease payments exceed this amount, the excess cannot be claimed as a business expense. What criteria must be met for a business to lease a vehicle in Canada? To lease a vehicle in Canada, a business must meet certain criteria. The business must have a good credit rating and a steady source of income. The business must also be able to provide proof of insurance and have a valid driver's license. Additionally, the business must be able to meet the lease payments and any other financial obligations associated with the lease. For self-employed individuals in Canada, is leasing or buying a car more beneficial for tax purposes? For self-employed individuals in Canada, the decision to lease or buy a car depends on their specific circumstances. Leasing may be more beneficial if the individual wants to preserve their cash flow and wants a predictable monthly expense. Buying may be more beneficial if the individual wants to claim capital cost allowance (CCA) on the car. It is recommended that individuals consult with a tax professional to determine which option is best for their situation. We are here to help. Visit us at www.theaccountingandtax.com or call 416-283-8714 if you have any questions.